I'm gonna rock the hat and then I'm gonna take it off.
All right, that
Yeah.
sounds good. All right, so three, two, one, let's just roll. All right, today Darrick and I are doing something a little different. So pretty much weekly, we have an internal company meeting where we will kind of talk about, what people are buying and kind of tell their stories, and just kind of see what's working in terms of what products we have available that the marketplace, our clients are enjoying. And so I'm here with my cousin and business partner, Darrick Wilkins. Hey, Darrick.
Hey, and I'm definitely not a cowboy. I just couldn't help myself. I'm in Jackson Hole, Wyoming. We've spent the past week hiking, seeing bison in Yellowstone. And yes, I got the hat. I'm definitely not a cowboy, more like an urban cowboy, maybe, but definitely not a cowboy. But I couldn't help myself for this video.
Yep.
So what's going on, Drew?
Is that the hat that they bought you out in Jackson a couple months back, or like what,
It,
last
it
year?
actually is not. This I didn't bring that one, and we
Okay,
were
so you
just
got multiple ones.
downtown, and I was like, "This one looks cool." I saw a real cowboy with a cool hat that kind of looked like this one, so
You
that's where it
said you
came
were going to
from.
rock it at the beginning and maybe take it off later. I think you should just
Yeah,
keep it on.
I might. We'll see.
Yeah.
So,
So you're
but
on
yeah,
a working vacation because we never stop work at LTC Tree.
yeah, and we, when you go on vacation, like anything, you get ideas. At least for me, you get ideas. Being in a place like this with this just majestic scenery, it really kind of gets some inspiration, gets the ideas flowing, and what I've noticed being out here, Drew, if I can, is there's a lot of very successful people in Jackson Hole, Wyoming. I think Teton County is one of the highest net worth counties in the world. So you just being around, some of these people, you kind of pick up that they're planners. They have their standard operating procedure in place, and it doesn't have to be at a multi-million dollar level like some of the people out here, but you could have your own standard operating procedure with retirement planning, and that means just taking some small actions early on, and it'll prevent a big catastrophic thing later. And it also gives you, frees you up to have some fun in retirement, which
Exactly.
we all want to
Exactly.
do.
Uh, I can't tell you how many people I talk to who, whether they have kids or not, they say, I don't want to have to earmark all this money for long-term care that I may or may not use. So I want to take a small portion of that, buy insurance in case I need it. So we haven't really planned ahead on this, but let's have our weekly meeting and kind of talk about some of the various cases that we're dealing with right now, because I think it kind of illustrates to someone who may be considering long-term care, who should and maybe who shouldn't buy different types of policies and stuff. So I got one for you,
Okay,
and we're
let's
going to
hear
be
it.
completely anonymous with our clients, of course. But I've been on the phone with this gentleman for several hours over various calls, and we never really got into what he did. But he name dropped at the very end of our last phone call. He's like, "Do you know X?" And he name dropped a prominent NBA basketball player. And he said,
Okay.
"That's my business partner." And his question was, would he be able to qualify for a long-term care plan? Because being an NBA, he's like beating his body up to death, He's like, whereas, me, I've just been sitting in a chair and staying in good shape my whole life. Um, is there a differentiation around careers? So let's go ahead and answer that. For underwriting, do they take people's careers into account?
They don't. They really don't. There's no like on life insurance questionnaires. Do you mountain climb? Do you scuba dive? Do you parachute? There's nothing like that on long-term care insurance. And the reason is the life insurance is relatively low. What they're going to look at is your case and your health on an individual basis, and then make their determination.
Exactly. That's what I told him. I said, basically, it's going to come down to if in your career, like let's say you're in public safety, a lot of them beat their bodies up. You're probably going to be talking to your doctor about disabilities and things like that. That's what's going to knock you out, not the fact that you're a firefighter. You know, so
Exactly. So what happened with the conversation? Where did it lead?
well, he I can't give any specific information, but we ended up talking about some majors for my daughter Sarah, who's getting ready to go into college, because he's
Yeah.
in some fields where he has access to information I didn't know. But what he's buying is a hybrid long-term care plan, single premium. So he's going to knock it out and get it done. And so, higher net worth for sure, up in the multi-millions, I would imagine. We haven't gotten that far yet, but something like that. But again, just to have a hedge on that long-term care claim that goes for 6 years, you can buy, $1 million ultimately worth of coverage for 100K. That's a pretty nice little leverage factor.
And it's tax free as well. And for those, Drew, who, they've heard the term, long-term care insurance, but they don't really know what it is, much less hybrid long-term care insurance. What is hybrid long-term care insurance?
Yeah, that's a great question. He's going to put $100,000 into a hybrid plan. The hybrid is life insurance and long-term care. The focus of this particular plan is on long-term care. If he never needs long-term care, basically whatever he put in, because he's a little bit older, is that premiums returned to his wife or his beneficiaries, kids, whatever. But if he needs long-term care, you get that huge tax-free leverage factor.
The leverage, yeah, yeah.
So
And
go ahead.
that's a product that, I started in the industry in 99. It was just traditional long-term care insurance, which is like your home, your auto insurance. You just simply pay that monthly premium and the coverage is there if you need it. But if you die, tough luck and never use it, tough luck. Uh, the premiums were also not guaranteed. Hybrid long-term care insurance was developed and became mainstream about 10 years ago. The premium's fixed, so that 100K he's paying, it's never going to be higher or lower. That's exactly what it is. And he has the guaranteed benefits for the rest of his life to use at any point.
Yeah, it's funny you
So,
mentioned 10 years because I just got a call from another client from 10 years ago. He's actually a reverend up in Wisconsin, and he said, I just want to make sure that they got my 10th payment and I'm done. And I was like,
oh,
congratulations.
there you go.
So that was probably one of our first, hybrid. I think we said we'd been doing this for like 12 years, but one of our first mainstream hybrid clients just got his 10 pay done. And to that point, for those who are watching, you can pay hybrid plans either upfront, drop $100,000 check, maybe 150, or you can pay it over 10 years. And a lot more people seem to be doing the 10-year payments these days, kind of dollar cost averaging in.
Yeah, yeah, right. And it kind of gets me thinking that on your guy who just paid it off, when you plan ahead, he probably did this in his late 50s, early 60s,
Yeah, late
whatever it
50s.
was, he's paid off now. And that frees him up to not have to earmark that chunk of money for the what ifs. And so he can go have fun in retirement. We want our clients to have fun in retirement, take the vacations, go out to eat, give the grandkids extra money without sweating it. And that's really what long-term care insurance does. It frees you to not have to worry about those things when your head hits the pillow at night. And that kind of reminds me of another case that I had,
Yeah, let's hear what
which
you got this week.
it's so, yeah, there's a lady who, you know, going back to the financial crisis in 2008, we had the Federal Reserve lower interest rates to near zero, and they left them there for 18 years. Up until 2022, 2023, that's when they started finally raising them to in any material way. So if you bought an annuity between 2008 and 2023, there's a very good chance that you can refinance your annuity into a much higher guaranteed interest rate. So that brings me to my example. I had a client who they put 600 and $750,000 into an annuity and into a lifetime annuity, which means it's going to pay them a guaranteed payment for as long as they live. They did it in 2021, I believe, and that netted them about 42,000 pre-tax dollars.
Okay, hold on. You're
So
going
I was,
too fast. I'm having trouble.
yeah,
So, okay, so they had
okay.
an annuity from 4 years ago, roughly, that was paying them 42 grand.
$42,000 guaranteed for the rest of their life.
So they're getting an
So
annual check from the annuity company.
yeah,
Is it
you
paid
can take
monthly or
it. They're
annually?
taking it monthly, but yeah, they're taking a monthly check.
Okay,
But
so we're
you
talking
can,
income now. We're switching from long-term care to income.
yeah. But this also relates to enjoying retirement. That's kind of where I'm going with this. And so we were just having a conversation, and she brought it up. I was like, "When did you get that?" I was like, "Well, let me see what interest rates are out there." So because interest rates are so much higher, we increased their income on a percentage basis, 36%. We took them from $42,000 a year to $58,000 guaranteed for the rest of her life. And
Wow.
so that was just simply doing a little bit of paperwork. And so when you have and that extra, I don't know, 12, $1,300 a month that they're getting, that just gives them extra money to go have fun with. Because, people typically work for years and years and years accumulating a nest egg. And a lot of times they're a little bit apprehensive to spend it when they retire because, again, for the what ifs. So there's even if you don't want long-term care insurance, there's lifetime equity index annuities that will guarantee you an income stream for the rest of your life. And there's some companies out there that will double your annual payment if you need long-term care for 5 years. Now, Drew, I know you've been researching that product. Tell us a little bit about that product, where as far as the long-term care component.
Yeah, yeah. So I actually had a guy this morning sign up for that same annuity. Um, we won't give the specific product name for compliance reasons, but call us if you're curious. So basically, this gentleman, he's in a little different situation. He specifically, okay, so your client, they're turning their income on immediately, right? So
They are, yeah,
they're
yeah,
going to start
that's
getting
right.
paid from the annuity company immediately. He wants to get long-term care coverage, but he couldn't qualify due to his height and weight and his
Okay,
build.
BMI,
And
yep.
but he's got a 401k that's quite healthy, and he said, "I want to take a few chips off the table, move them into this instrument." And he's going to defer taking income. And every year that he waits, he's getting a 10% simple increase in what that income will be. So for him, he's putting in $200,000 into the annuity. And, by deferring it out several years, he's going to have a long-term care payment, should he need it, of something like $65,000. We were just kind of running some scenarios, paid for 5 years. But he can also take in half of that for his entire life as an income. So it's a pretty cool deal. And his whole thing was like the markets that are all-time highs. I've got a bunch of money, exposed in these markets. Let's take some chips off the table, put them in something that's really secure and guaranteed. And that's why we went this route. But let me ask you this. Okay, 42
Yeah,
to would you say $58,000 a year bump in
yeah,
income?
that's
Because I
right.
think there's probably a ton of people out there that have older annuities and didn't even realize they could reshop them because the companies don't even want you to know you can do this. They want to keep paying you that paltry sum. What do they do? I mean, are they filthy rich? Who are these? What type of person has the kind of money to buy that?
Yeah, this particular couple, they were in the education field. They're
Teachers?
teachers or professors. I can't remember which one, but they've
Okay.
accumulated a little nest egg. It wasn't, it might have been, I don't know, 1.5, 2 million bucks, but they've been doing it over 40 years, just every year, just saving a little bit and getting compound interest on their investments. And so
Yeah.
that when they retired, they said, you know what, we have Social Security, um, but we will also want to get to create another pension guaranteed for life. So that's what they did back in 2021. And then, we're just having a conversation about just long-term care in general. And this came up and, and 2 weeks later, they had gotten a 36% increase in their income
So,
with,
and I
again,
know the
just,
answer to this, but let's illustrate it. So they
yeah.
had to do 2 weeks worth of jumping through hoops, didn't they? Nope.
We do that. I mean, we do the paperwork for you. Everything's electronic
How
these
long did it
days.
take them? Like, how long did it take them from their
It
perspective to?
was 13 days before, 13 days in between. They said, go ahead, did the app, submitted the transfer paperwork, until the new company was paying them that 36% higher
Okay, so 13
monthly
days
payment.
time, and they invested what, an hour of time on their end to get this done?
And then I mean, an hour, it's probably us. I mean, we spent, an hour or two of just doing paperwork, but they didn't have to do anything because, I mean, they just give the authorization. We take care of the rest. So for people out there who have older annuities or some bond funds that they're not happy with, this might be an idea to at least look at, because we're big fans of the stock market. Go ahead and leave the bulk of your assets in the market, but 10, 20, 30% of your portfolio, take some chips off to your table, as you said, Drew, and then you can guarantee yourself a lifetime income stream in a 30-year high um, interest rate environment in the annuity space. I've been doing this since the 1998, I guess, is when I officially got in. And in that 28-year period, this is the as good as annuities has been. So if you have an old annuity out there, call us and we'll just see if we can get you a higher interest rate.
Yeah, and the definition of an old annuity is like 2 or 3 years old or older. I mean, if you bought
That's
it
right.
this year or last year, you probably already got the best of
And,
breed. But
and these companies, I mean, we're a broker. I mean, we broker long-term care insurance. We work for you, not one company. So we will play these companies off each other. We have no preference to any of them. So these companies are highly competitive right now. They're all trying to one up each other to attract business. So some of them will even pay surrender charges, pay you a bonus to cover the surrender charge. So there's a very good chance, even if you just got it a couple years ago, that you can make get a bonus that will more than offset any surrender charge you have and get you a higher interest rate and guaranteed lifetime income.
that's so cool. I mean, that's got that like. I mean, let's face it. Let's be on a little honesty here. Sometimes selling insurance can be pretty mundane, but like when you can actually make somebody money like that, it's kind of like gives you a little bit of a rush, you know?
Yeah, no, and like I, I know like people again, I'm going back to this have fun in retirement because a lot of people I think they want to do it and that's kind of their goal when they're save all these years, but when the time comes, they're hesitant because of the hey, what if this happens? What if that happens? And that's where if you just again plan ahead, get your standard operating procedures, in place, you can really set yourself up to travel the world, take the vacation, spend time with the grandkids, go out to eat, just do fun stuff, anything that you want, play golf, whatever you want. Um, so if Drew, I think you said that you said something about to the effect of that I guess the case that you got this morning. What was his driving force that got him to I know he was an older guy or overweight guy, I
Well,
think you
yeah.
said.
So, okay, yeah.
Was it
So
just the long-term care or did he have like an income need?
he liked the idea of income with the long-term care bonus. And I mean, he just liked them both. I mean, he preferred to get a long-term care plan, but he didn't qualify. But
Okay.
he was very happy with this as an alternative. And honestly, I think if you can afford this, it's not a bad alternative because like I tell people, these things they have like different levers or whatever you want to call it, and like it's like squeezing a balloon. Like you can get a lot of life insurance or a lot of long-term care or balance or whatever, and these just have a nice balance of like whether you do or don't need long-term care, you're gonna have a nice security net there, you know?
Yeah, yeah. And then and last thing we can wrap it up
Yeah.
is if you don't have to take income, if you want to just use this as a growth in principal protected growth instrument, you certainly can because in the background, your funds are growing to the S&P 500, the Nasdaq. There's various brand name fund families you can choose from, and so if the time comes, if you hey, you know what, I think I'm going to take an income in 10 years, but if you change your mind, you certainly can. You can walk away lump sum. So I just want to make sure that point was out there too.
Yeah. And initially he said, okay, it's a 10-year annuity. Do you have anything shorter? And I said, we do, but for to get the best of breed product, you really need to commit 10 years. And if you don't want to, that's totally okay. We're looking at the wrong type of policy. And he kind of did some research and said, you know what, I agree with you. I'm okay with the 10 years. I mean, that's the
Yeah,
biggest downside with these is you have to wait 10 years to see how much that accumulation is if you want that. But you can always turn income on anytime during those years. So yeah, I
that's
mean
right.
it's kind of cool when we have a few stories like this. I've actually got more, but we're running out of time, so we'll wrap them up for now. And you have a beautiful background there. You're in Jackson Hole, Wyoming. I don't know if that many people are familiar with Jackson Hole, but like, what's the big driver? Like, what attracts people to that area?
I think it's just the weather, the amazing scenery. I mean, you fly in to Jackson Hole Airport, and to the right of you, if you're headed west, is going to be the Grand Tetons, and these just 15 snow-capped peaks. The airport's right at the base of them, so you fly in, and then the downtown area is kind of quintessential Western flair. They've been doing this every, I guess, not during the every probably May to October for the past 68 years. They have a reenactment of like a little gun shootout with some actors at the town square, which is kind of quintessential kind of Western vibe. You got the whole, it's not sidewalks there. It's boards, and you got the stagecoach giving little tours. It's a real cool place. And then draw for me is just hiking. We went to the Grand Tetons and Yellowstone. Is you can be in the park gate in 55 minutes.
Yeah, that's okay. So
So
close to Yellowstone. Yeah,
yeah.
I was in a little western town, not quite that sophisticated, but it was a little western town, Bridgeport, California. So in the
Hmm.
state of California, and on the city's like town banner, it said "God
Yeah.
bless America." I was like, "This is
Wow.
Americana right here." Not many
It's
people would even believe
I
that.
know, yeah, especially these days in California. That's right. Yeah.
But
Well,
there's a lot of areas outside of LA that are still like Western pioneer towns.
yeah, yeah, yeah. It's real cool. I have to go visit those very soon because I love California. It's a great state.
Well, you got me
So
beat on the background for today. It's been
yeah,
fun.
I'll be back to my suburban Atlanta, background here soon. But yeah, for those watching, hey, thanks for watching. We want to have a little fun today, and please excuse the hat. But we're gonna go out to a steakhouse tonight, the Gun Barrel Steakhouse restaurant tonight in Jackson Hole. But if you want to go back to the point of this, is we are LTC Tree. We help people shop the market for long-term care insurance, index annuities, term insurance, um, and we'll basically shop the market and see which company has the best rates. So call us, call us, email us. There's a form on the site. I think we'll put the link to our website. You can fill out, or literally pick up the phone and call us, and we could have a quick 5-10 minute call and see if there's any opportunities out there.
Yeah, and while we're talking insurance, we'll talk vacation planning and travel. We should become travel agents if this thing doesn't work
Yeah,
out for us.
that'd be fun. That'd be
Yeah.
super fun.
All right, cool, man.
Anyway,
Have a
guys,
good evening.
all right,
Enjoy the gun barrel. Enjoy dinner.
all right. Hey, thanks for watching. See you guys.
Bye.